Hey, everybody. Happy Thursday. So we're one day away from the weekend. A lot of good stuff happening this weekend, too, before we get into the stock market and stuff. Big fight, right? McGregor and Poirier. That should be an interesting fight for you fight fans out there. NBA playoffs are in the finals. So there's that for you basketball nuts. Football season, oh, thank God, is all right around the corner. And baseball is kind of fun right now, right? There's a lot of close races and stuff for you sports fanatics out there. So let's roll into the weekend. Now, we're still sorry I missed you guys on the update yesterday. I ate something during the market day and I couldn't even record after that. I was just upset stomach and stuff. So my apologies. So look, we're looking at the market conditions this morning, and we're going to kind of step back from the stock of the week because we think there's one more leg selling down before we start to see a bottom. We can see in the last hour or so the markets have fought back, but we know how that lunchtime period is, right? Especially that hour or so before lunch through lunch, things get a little bit opposite, right? So we'll see how far this goes. Plus, I'll show you on the chart, on the 5-minute chart, how the Fibonacci retrace is going. Let's do a little technicals today. We're still short the spider. That thing's right around break even right now. We're still short Twitter. That hasn't broke down enough. We might end up rolling that out. We're still long in the oil plays, and we're going to stay there. You see oil this morning went right back green over that 72, pushing towards $73 level. Again, what happened with oil the last few days? The same old story. We talk about why you have to be patient with your trade, why you should give your options on your oil trades a little bit extra time than you would on a normal option play. Even if you got to pay a little bit more premium, that time is what you need. The volatility, right? OPEC got a hair up their ass, got into a little argument. People were talking about the end of OPEC and things like that. Things kind of calmed down right over the last couple of days, and boom, oil is back bullish again. We just sat through that. We're still in the PEJ. That one's out to the end of August. We still like travel and leisure, even though we're hearing about deflation and things like that now. Isn't it interesting, guys? The media. We talk about it all the time, how the injustice of CNBC and the media and all these experts that are telling you to do one thing and you know they're doing another. Isn't it interesting how we went from these inflation concerns in less than 12 hours, we went into deflationary concerns, right? We've told you why that 10-year bond is low. It's stimulated artificially. It's being pushed lower. It's trying to go up. It wants to go up. It knows it should go up, but there's something with its foot on its neck called the Federal Reserve. So let that kind of work out, guys. We're going to stay with this spider short at least through the afternoon. We'll see how the afternoon session goes. We're feeling pretty good about it right now. Like I said, in the last hour or so, there's been some fight back in the market, but we'll see. Before we get started on these charts and stuff, guys, let's talk about the media a little bit. It just is, it's constant lies right now. It's almost scary right now how easy it is for a lot of your media personalities to just blatantly lie, right? We were looking through CNBC's website before we started the recording, and Michael Avenatti, remember Avenatti, the anti-Trumper, he's going to be sentenced today. So remember how the media fawned over him and stuff like that? We got to be very careful with what we read in the news right now, and be your own person, guys. Read it and disseminate it on your own. Stay away from the editorials. We told you guys, we never watch editorial shows. We never watch anybody on CNN, anybody on MSNBC. We never watch anybody on Fox Business News, regardless of our personal ideologies, because it's too easy for people to believe a lie right now. Just like with the Avenatti thing, right? These people were so voracious against Trump that they'd believe anything. If you were anti-Trump, they'd latched onto you like a darling. And it happened with Avenatti, right? Remember the threats and all this stuff. He was going to take down the establishment. Well, he ended up being the establishment, and he just got taken down. So I guess he accomplished his goal. implosion is sometimes the same as the explosion with these idiots. But you see what I mean? It's just too easy. And the biggest thing is, as the public, is how easy it is. As long as they say what you want to hear, you believe it. Stop doing that. There's some very, very interesting things happening with our economy right now. You saw a slowdown in employment. We talked about that, right? Over the last few weeks. What happens if this happens? What happens if employment comes to a standstill? What happens if wage growth comes to a standstill? What happens if growth comes to a standstill? What can the Federal Reserve do to help this? Well, it has the reverse effect like it did this morning. And what it is you saw your 10-year bond just went into the crapper, right? And the market freaked out. Market freaks out if the bond goes up. Market freaks out if the bond goes down. Which is it, right? So, have some patience with your trades, be a little bit smarter when it comes to the news and stuff like that. Let's pop on over to some charts. Share a screen with you here. All right. And you can see, look, that S&P's fought back, right? It was down under 4,300. It's popped back up to that 422 level. The Dow was down, I think, as much as 500 this morning, just cut about half its losses. And the NASDAQ's recovering a little bit too. The VIX spiked over 20 this morning, but it reeled back. It's still up about 10%. But as long as it's below that 20, you're still in a tug of war right now. And the bulls are still, it leans a little bit bullish, but it's at that point where it could turn real quick. We think there's one more leg of selling. We're not buying this dip right now. We might regret it. We might not. There's always another leg after that. Some of the big news, and we wanted to talk about this, is one, you can see the Olympics. There's going to be no spectators. Japan's back on lockdown. That's, we're in Hawaii, and the Asian tourist is a big part of our economy, and we've been just having this explosion in tourism. Last week, 150,000 more tourists came to the islands. I think they're expecting another 30,000 plus over the next day or two. So the mainland traveler, the Euro traveler, the worldly traveler is coming, but we still haven't had that Asian traveler, and looks like we're not going to have them for a while now. Is that part of the stopping, right? Your economy grew. Think about it just with tourism in Hawaii, using that as a micro example. We had this big growth over the last month or so. And it's from all these people coming in from the mainland and other places, but not Asia. Asia is usually a staple for us. Now that we've filled up that gap with one part, we're not getting the second burst that we need. And so is this deflation true? I don't know about deflation, guys. Be careful with that, because what's happened here is, and it's kind of the opposite of what was told to us over the past few months, right? We were concerned about inflation because prices were rising and stuff like that. We heard the story about transitionary and things like that. And it makes sense, right? We backfilled. We got a little bit of inflation because we backfilled, but we haven't backfilled the whole way. Now we're stuck. Labor is stuck. Your Asia is still closed down, India, Japan. Where does the next growth spurt come from, right? Where is that going to come from? So are people making more money? Well, they're definitely not back at work. So we're going to sit through this at least through lunch and stuff, and we'll check it out. You can see just when we were talking, the VIX came back under 18, and the S&P, I believe that's a high for the day. Let's go check it out. 52 week, we don't want that. High for the day. Yeah, it's right at the high for the day. So it'll be an interesting afternoon. Let's go to the oil chart. We talked about it, right? Oil just been having this ugly days, ugly moments, right? Little sell down there from when it first broke that 76. OPEC got in their little skirmish. People were talking about oil, this and that. And guess what? Now all of a sudden it's going bullish again. And that's because it's just temporary on that. And that's why we tell you, be patient with the oil trade. Let's look at the big chart. Let's look at a year chart. That doesn't look too bad, huh? It made another high, came back down to about the support area, and now it's starting to do a little hammer action there. So for you chartists, enthusiasts and stuff. You can see on the futures got a little chippy on the S&P 500 the last few minutes, but is your buying drying up? We'll see. We'll see. And that's why we're going to wait and see through the afternoon. We'll see how this really goes. One of your big telltales was gold, right? Gold and the dollar. The dollar softened real big and gold kind of came off those highs. It's back below that 1800 number. Remember what we tell you about round numbers in gold. Other than that, how about Bitcoin? Bitcoin had an ugly morning, but it's been recovering so far. Cryptos, we talked about that many, many times. Tomorrow we'll do our crypto show, not our month chart. We want our year chart, year daily. And you can see we're just still in that pattern. Again, guys, as long as we're in this pattern, as long as we don't violate these lines for any dramatic moments, it's in a buy range right now, and it's an accumulation thing right now. What saved Bitcoin, guys, was your longs, your hodlers, they call themselves, HODLers. I like saying that. But what saved Bitcoin was your hodlers. You know, your soft hands sold, and your soft hands sold hand over fist. And what happened was your hodlers just sat still, and then your hodlers started accumulating. That's why you get a little push up, a little push down. It's probably just basically probably right now just a day trading stock. Let's pop on over to a better chart. So we had, let me move this handsome guy away. Let's use Schwab Street Smart Edge. You can see we put a Fibonacci on the sell down for today on a 5-minute chart. We put the top at yesterday's high, the last couple of highs, and then we put the bottom at this morning's low. And you can see we've hit that 50% mark. We're definitely in the gap that was created this morning by the open selling. And it's kind of a rubber hit the road moment. If you look at it, we're right there at that 200-day moving average, and we're kind of fiddling at that 50%. So we'll see how that goes going forward. It's an inflection moment. So just be careful with it, guys. Let's pop on over to CNBC and see what they're talking about. You know, some of the big things that we've been talking about lately, you know, credit is cheap right now, right? Money's cheap right now, but one of your biggest banks, one of your biggest consumer banks, right? Most people, almost everybody I know that lives on the mainland, either has or had at some time a Wells Fargo account. They're also the biggest thieves in the banking industry, right? And we've seen that over the years, right? With their little interest rate. Remember when they were doing fake loans and stuff like that? I don't know, fake accounts, stuff like that. But they've just cut off they've just told their customers they're cutting all the personal credit lines. What does that do to the market when you guys really think about it? What that does is it eliminates a lot of people's ability to leverage money right now and leverage cheap money. So why would a big bank like Wells Fargo do that? Sorry, a lot of coffee this morning. But you think about it, why would a big bank like that, when we're supposed to be in this big growth area, when people are starting to go back to supposedly going back to work, when people are starting to get more wages and things like that, why would they pull that away? They make money lending you money, right? And they make more money using the money you pay them or put in their bank to make more money in the investments and stuff, right? Why would they do that? Maybe they're seeing something in the horizon that's a little bit uglier than what they're telling their stock clients, right? Other than that, guys, let's see how we shake out. Like I said, we're going to step back. We might do a stock of the week tomorrow. We were debating doing a tip stock. If you guys aren't familiar with tip stocks, those are funds that are interest rate savvy, funds that are that'll protect you against things like inflation. But now with this big addition to our inflation story, deflation, we figured we'd step off that. We were looking for another stock to maybe offer you that you could add to your portfolio. But let's see how the afternoon goes today, guys. And we recommend you guys do this too. We're stepping back again, and we're just letting the market kind of tell us what it's going to do, because it's kind of at that inflection point. But there might be a better buying opportunity over the next 24, 40 hours. And it's Thursday. So, you know what I mean? One thing this did do is, we sell weekly covered calls in our membership, in our live room and stuff. we just raked the floor with them this week. For you guys that follow us with Virgin Galactic, there's big news of Virgin Galactic. You guys know a few months back, we played some $20 calls. The thing just blew up to like 35, 40 bucks. So we were cashing in the premiums at 2, 3, 400%. A lot of us took some of those contracts and actually exercised them at some free stock. I say free, it's based at $20 on the strike, but we use profit from the other options to pay for the stock. So it's free stock. Spice has got something big on Sunday. That's when they're going to do their Virgin flight and stuff. So Spice, counterintuitive to the market today, is actually green a little bit. So we're still holding Spice, guys, for you guys that follow along on that. Virgin Galactic, SPCE. Some people call it Space. I have this habit of calling it Spice. Okay, yeah, it spices up the portfolio. But that's what I'm talking about, SPCE, Virgin Galactic. If you're not in it, go take a look at it. It might be a $60, $70, $100 stock in a few months, depending on how this. Of course, we could have a bad takeoff or something like that goes wrong, and then all of a sudden it's a $20 stock again. I'll tell you one person that regrets selling Spice, and then that's Kathy Wood. She sold back at those 16s when Branson sold his shares. She missed out on quite a move. Other than that, another long play for you guys that are longtime followers of us. We bought Beyond Meats, right, a couple years ago. We still hold that position, and we're going to hold that position. We were lucky enough to get around the IPO time, and we got in at about $77. Most of our members are in at around the 120 level. We're going to hold that too. They had some big news today about chicken nuggets, fake chicken nuggets. I shouldn't say fake, alternative meats, chicken nuggets. And they're going to be in about 400 outlets going over the next couple of weeks. So we'll see how that works out. You see how we do it there, guys? Patience in your trading. It's easy to get caught up in these little short-term moves, right? Like today, but it's so easy to panic and freak out. Yesterday, right? The market, making new highs. I gotta buy. Well, this morning you would have been crying in your cereal, right? Patience with your trades. You see how like we bought that Beyond how many 2 years ago. We have X US Steel that we bought 3-4 years ago in anticipation of the Trump infrastructure plan. It looks like deja vu all over again with the Biden infrastructure plan, right? Remember the Trump infrastructure plan just got derailed. It looks like the Biden infrastructure plan is getting derailed too. I don't see them passing that. It's not a deal. It's too much of a back and forth between certain factions. And that's the thing too in Washington right now. And let's be honest about this. I don't care what your political ideologies are right now. Right now, Washington is just a bunch of factions that it doesn't matter whether it's a good idea or a bad idea. If it doesn't come from the faction, we attack it and we destroy it. And that's why a lot of good ideas are going down the tubes right now. That's why any progress is going by. And I'm going to close with this, guys, and I'm going to close with this very seriously. When your government starts running your economy based on a sociology, a social-based government where entitlements are more attractive than the normal way, which is work and personal growth. This is what you get. This is what you get. You've got a market right now that doesn't know what to do. Right now, the market needs the Fed to come out and say something. I don't know what they're going to say at this point. Personally, I think what they should do right now is taper off those bonds and do a 1/4 point interest rate hike. I think that would cure everything. But we need that labor market. The labor market's discombobulated. We said it back in November when the election was over. All they had to do was open up. Don't do anything. Don't tinker with anything. Just open up. and we can't do that. Now we're going door to door like the Gestapo, forcing people to get shots. That's another story too, right, guys? You guys know me. I'm vaccinated. I'm pro-vaccine and stuff like that, but I'm also an American. If you choose not to get vaccinated, that's your right. And now we're acting like the Gestapo coming to your doorstep. So again, it's all about the social issues. It's not about the economic issues, right? And you can say that that's an economic issue, but it's really not. I mean, you look at your case counts and stuff like that. You look at your opening. Nothing is slowing this down other than opening up. Opening up. You look at the United States, look where we are right now, and ask yourself, why isn't Japan at that point? A smaller country, smaller population, even easier to control, right? No real borders except ocean, right? And yet they're so far behind. Look at India, not making any progress at all. Many pockets around the world that just aren't moving forward. But yet your two biggest economies, your two hardest to control populations because of borders and things like that, are almost at 70% and reopening, but the rest of the world isn't. You have to ask yourself, why? Why? Anyways, so look, let's call it an update. We'll be back tomorrow with a normal update. We might do a stock of the week tomorrow. We might not. Let's see how the market conditions go the rest of the day. It might be a buy the dip. We think there's one more leg down. We'll see if that's right. But we'll play it. We'll be nimble either way. We got nothing expiring as far as options tomorrow, so we're not worried about witching. We'll just kind of let it do what it does and tell us what to do going forward. So we're still long on oil. We're still long a little bit on leisure and entertainment with PEJ. We still own the stocks that we bought in the stock of the weeks. We're short Twitter and we're short the spider. The Twitter short is Twitter's like a cult stock now. It's like Tesla used to be, right? Tesla's so cultish, right? Elon Musk could literally close every factory that he had and people would still buy Tesla, right? Twitter's kind of like the same thing right now. We've got this big Trump lawsuit, class action lawsuit. So he's the lead litigant. And then anybody that feels that they've been spurned by social media, Twitter, Facebook, Google, can jump on that lawsuit. It'll be interesting to see how this plays out. I don't know that it's really affecting any of those stocks right now as much as kind of a negative sentiment, the fear of the deflation and stuff like that. High valuation stocks might have been the first thing to go to sell this morning, and that might have been what hurt Facebook. And Apple is actually still trading pretty well, but it's not really included in that too much. But your Facebook, your Twitter, and your Google, Twitter was down about $2. I'm not sure what it's down right now. I can check real quick while we're talking. It's down about $1.86 right now. Other than that, guys, let's see how we shake out. Looks like we're softening a little bit on the S&P 500 and stuff. It'll be an interesting afternoon. It'll be, look, on that lawsuit, guys, because I'm getting a lot of questions about it. On that lawsuit, we have to see how it plays out a little bit. You know how these class action lawsuits go? It could right off the bat get shut down by some court or something like that, as a frivolous suit or something. Who knows? God knows. It's got Trump's name on it, so who knows what's going to happen with it, right? Between the liberals, the progressives, and the conservatives. Let's just be market traders, okay, guys? And let's leave that nonsense up to the children. Other than that, guys, I'll see you guys tomorrow morning. You guys know how we're playing it. One more time, we are short Twitter. We are still short the spider. We are long PEJ. Out to the end of August as a leisure and entertainment stock. That thing's holding around that $50 level real strong. We're still long on ET and we're still long on MRO as far as the two oil plays go. And we do own the stocks and the options on both of those. So I'll see you guys in the morning. You guys have a safe afternoon.